We're getting earnings from the giant U.S. banks. JPMorgan's profits rose in the fourth quarter, but investment banking fees fell, missing the firm's own guidance. Let's get more from Lorne Steinberg, president of Lorne Steinberg Wealth Management. Lorne, great to see you right here in the studio as well. Anything jump out for you with these JPMorgan numbers?
Certainly, I think the investment banking numbers are overblown, Andy. This is an incredibly choppy business, and quarter to quarter, it's hard to draw conclusions. JPMorgan remains number one in that business. I think what does stand out in a serious way is that market volatility led to huge increase in trading revenues. And that augurs well for 2026, where we expect to see continued volatility. Also, incredible strength in the asset management business as well. And JPMorgan is forecasting improvement with net interest margins going forward in 2026. So listen, you're not going to get the same boost in earnings that you had in 2025, but we're still bullish on the stock and on our shareholder.
Let's put up so the stock doing not much in the pre-market. Maybe you can put up a 10-year chart. It's been a thing of beauty to own for years.
Absolutely.
Is this almost a stock you can just own and forget about?
So I have to say, Jamie Dimon has managed to avoid every bucket of manure, if one could say that, that other banks have gotten themselves into. Clearly, their internal controls are astoundingly strong for this size of bank. Mm-hmm. And, you know, there will always be a question mark, you know, the day that Jamie Dimon decides to resign, mm-hmm. The new person will be under pressure, but it's certainly been that way, and it's a core holding in our firm.
What risk do you see right now for equity investors with markets at record highs?
Well, certainly one of the risks is any interference with the Fed. And it just brings back to mind in 1980s, the term bond vigilantes was coined by Ed Yardeni, where the bond market got worried that inflation was going to get out of control and drove up interest rates. And we're already seeing, signs of investors skittish on that way. So that's one risk. Another risk certainly is if the U.S. government gets involved in capping interest rates and getting involved in other industries, that would be a serious issue for investors. So, I mean, these are some of them. And also geopolitical, which I usually don't worry about, but which is a bigger issue today, I would say.
Although the credit card thing, it seems that it would be tricky for U.S. President Donald Trump. He'd need Congress to back him. Maybe he'll get the best of both worlds. He won't really have to antagonize the banks, but he can claim, well, I tried.
Absolutely. And of course, the risk of capping credit card interest rates, as high as they are, and they're astoundingly high, is that it then pushes borrowers who are desperate to go to places they probably shouldn't go and spend even more money.
Broadly, how do you feel about U.S. stocks, Lorne? Are you seeing opportunities there, or is the market a bit inflated?
Some sectors are a bit inflated, but we're seeing actually plenty of opportunities. The economy is resilient. One area we see opportunities, Andy, is actually in a couple of technology companies which have AI exposure. The first one is Adobe, which for some reason is trading at 14 times earnings with double-digit revenue, earnings, and free cash flow growth. Huge profit margins. They bought back 4% of their shares last year. And the fears that, AI may hurt their business, it's the opposite. AI should help their business. So these shares are massively undervalued. And the other technology company is Cisco, which for years has been more or less a flatlining revenue company. But Cisco has returned to growth. They're huge in security. They bought Splunk for $27 billion, which is giving them huge AI exposure. And this company has returned to growth. And again, it remains an incredibly cheap stock, a consistent dividend payer and buyback of shares.
It's interesting. Those are two tech companies that have been around for a long time.
Absolutely. And at the top of their game, number one in their fields. I mean, they remain at the top after so many years.
Are you worried that, I think I've heard it said tech, value stock in tech can be a contradiction in terms.
It can be a value trap, but in this case, both these companies are growing. So this is not these are not flatlining businesses. These are huge margin, big free cash flow, and they've both been great capital allocators.
And aggressive buybacks by Adobe. What is your feeling? Are we in an AI bubble when it comes to some other stocks? Is there going to be pain?
I certainly think there's going to be some pain for some companies because there's so many hundreds of billions of dollars being spent on data centers and other things. Some of this money undoubtedly will not be spent well. The companies themselves, it's even hard to project what are their revenues and what kind of returns are they going to get for some of these investments. So the majors like, Alphabet and Amazon, Microsoft and Meta, et cetera, they're the survivors. They'll be the top, but some of the other companies that have raised billions of dollars with no revenues, that's where we have big question marks.
Even though, let's put up Google, aka Alphabet, maybe a 10-year chart. The thing languished actually earlier in the year last year, then came roaring back.
Fears of AI.
Yeah. People thought search would get hollowed out. I must say, I don't use AI that much, but I do find this propensity of it pretending to know when it doesn't. I wish it would more often say, "No, I don't know. Sorry."
And it's not 100% accurate, and it can be dangerous. And we're in the earliest days of individuals and people even figuring out how to use it, what it means, and what the value is.
I was going to say Alphabet for sure. It's an investor darling. But if, say, we get a company like OpenAI gets in over its skis with the massive debt and spending, would that not cast a shadow over the other internet stocks? AI stocks?
It may or may not, because the other option, what I think will happen is they'll end up being fewer competitors.
Yeah.
And the competitors that are left will be the ones that will be the winners in all of this. And listen, every major bank in Canada and elsewhere, they're all in net layoff. They're rolling AI throughout their institutions in order to make people more efficient and have fewer people doing more. So AI is real. Really, the question is the amount of money that's being spent going to generate an acceptable return?
Lorne, thank you very much indeed.
Great to be here, Andy. Thank you.
Lorne Steinberg, president of Lorne Steinberg Wealth Management.